What's up, everybody? Welcome back to the channel. My name is Andres, and here we talk about money, investing, and building long-term wealth. Albert Einstein supposedly called compound interest the eighth wonder of the world. He who understands it, earns it. He who doesn't, pays it. Today I'm breaking down 7 powerful secrets to multiply your wealth using the magic of compound interest. These are proven, time-tested strategies. No get-rich-quick schemes here. Stick around for the 7th secret. It's the one that separates those who build a little wealth from those who build a fortune. Let's dive into the first secret to unlocking the power of compound interest. The biggest advantage in building wealth? Starting early. The earlier you invest, the more time your money has to grow. Let's compare Alex and Ben. Alex invests $200 a month starting at 25. Ben waits until 35 and invests $400 a month. Both get an 8% return. By 65, Alex ends up with about $700,000. Ben, despite investing more, only has $540,000. That's the power of an extra decade of compounding. The growth isn't linear, it's exponential. Early on, gains are small, but over time, they snowball. The last 10 years are where the real explosion happens. Your investments start earning more in a year than you contribute. It's like rolling a snowball down a hill. The longer the hill, the bigger it gets. If you're young, you have a superpower. Even $25 or $50 a month makes a difference. Don't wait for more money. Start with what you have. The cost of waiting isn't just missed contributions, it's the lost compounding on those contributions. Time is your most valuable asset in this game. Open a Roth IRA, contribute to your 401k, or use a brokerage app. Just start. The person you'll be in 30 years will thank you for starting today. Don't procrastinate on your future wealth. The biggest mistake? Thinking you'll start later. Start now, no matter how small. Every day you wait, you're leaving free money on the table. The earlier you start, the more powerful compounding becomes. Give your money the longest runway possible. Time is the one asset you can't get back. Secret 2, always reinvest your earnings. When your investments pay dividends or interest, don't spend it, put it right back to work. Reinvesting is how you turn a single money tree into an entire orchard. Use features like DRIP, dividend reinvestment plans. So every payout automatically buys more shares. Even small amounts add up over time. Without reinvesting, you only get simple interest, linear growth. With reinvesting, you get exponential growth interest on your interest, dividends on your dividends. Resist the urge to spend early profits. That dinner out today could cost you thousands in future growth. Every dollar you reinvest is a soldier fighting for your financial freedom. Check your brokerage settings and make sure reinvestment is turned on. If you're investing in growth stocks, roll your profits into your next investment. Don't pull out gains to spend. Let your army of dollars grow. The more you reinvest, the faster your wealth compounds. This is the core mechanic of compound interest. Make reinvesting automatic and non-negotiable. Let your money work for you, not the other way around. Reinvest everything, always. Secret 3, consistency beats everything. Make regular, automatic contributions to your investments no matter what the market is doing. This is called dollar-cost averaging, and it's your best defense against market swings and emotional investing. Don't try to time the market, even the pros can't do it consistently. Set a fixed amount to invest every month. When prices are high, you buy fewer shares. When prices are low, you buy more. Over time, this averages out your cost and reduces risk. Automate your investments so you never have to think about it. Pay your future self first, set up transfers right after payday. It's not about big, one-time investments. It's about steady, repeated action. Think of each contribution as a brick in your financial fortress. One brick isn't much, but over years you build something massive. Consistency is the bedrock of wealth. Don't wait for the perfect time to invest. The best time was yesterday. The second best is today. Decide on an amount you can stick with and automate it. This habit will fuel your compounding machine for life. Consistency turns small beginnings into huge results. Make it automatic and never stop. Secret 4. Seek higher returns for your money. Don't settle for a standard savings account earning next to nothing. High-yield savings accounts are better for your emergency fund, but real growth comes from investing. The stock market, especially broad index funds, has historically returned 8–10% per year. A small difference in return, say 2% versus 8%, means tens of thousands more over decades. But remember, higher returns come with higher risk. Use stocks and index funds for long-term money you won't need for at least 5–10 years. Don't chase unrealistic returns or risky schemes. Diversify with proven investments like low-cost index funds and ETFs. Review your accounts regularly. Make sure your money isn't languishing in low-yield options. As you get older, shift some money to safer assets like bonds. But always make your money work as hard as possible. A few extra percentage points make a huge difference over time. Be proactive. Don't let your capital sit idle. The right rate of return is the engine of compounding. Hunt for better returns but balance risk and reward. Secret 5. Don't touch your investments. Every withdrawal breaks the compounding cycle and shrinks your future wealth. Think of your portfolio like a bar of soap. The more you handle it, the less you have. Let's say you pull $10,000 from a $50,000 account. You don't just lose $10,000, you lose all the future growth that money would have created. That's why you need a separate emergency fund, 3 to 6 months of expenses in a high-yield savings account. Use that for life surprises, not your investments. Avoid raiding your retirement accounts. Penalties and taxes can eat up 30–40% of what you withdraw. Mentally separate investment money from spending money. Make it hard to access. Don't link your brokerage to your debit card. The less you think of it as cash, the less tempted you'll be to touch it. Let your investments sit and grow undisturbed. Money should only flow in, not out, until you reach your long-term goal. Protect your nest egg like a dragon guards its treasure. The less you disturb it, the bigger it grows. Be patient. Let the process work. Withdrawals are the enemy of compounding. Build a system where your investments are untouchable. Secret 6. Every time you get a raise, increase your investment contributions. Most people let raises disappear into lifestyle upgrades. Don't fall into that trap. Instead, funnel a big chunk of every raise or bonus straight into your investments. This habit can shave years off your journey to financial independence. For example, if you get a $10,000 raise, invest at least half before you get used to the extra cash. Automate the increase. Adjust your 401k or brokerage transfer as soon as you know your new salary. If you wait, you'll find a way to spend it. This strategy attacks wealth building from both sides. You're adding more principal and giving it more time to grow. Do this every time your income rises. Your contributions will grow with your career. Over decades, this creates a steep upward curve in your net worth. You're not just relying on market returns, you're actively fueling the fire. This is how ordinary people build 7-figure portfolios. Don't let lifestyle inflation steal your future wealth. Pre-commit to investing more with every raise. Make your money work harder as you earn more. Accelerate your compounding with every pay bump. The final and most important secret: patience. Compound interest is a marathon, not a sprint. The biggest gains come at the end, after years of steady investing. Most people give up too soon. They get impatient, panic during downturns, or chase quick wins. The real magic happens after decades, not months. Remember, it might take 25 years to reach your first few $100,000, but only a few more years to double it. The growth is backloaded. Stay invested, especially when the market drops. Don't sell in a panic. Market downturns are temporary, but compounding is forever. Ignore daily market noise. Checking your portfolio every day will drive you crazy. Make your contributions, then let your investments be. Warren Buffett said, "The stock market is a device for transferring money from the impatient to the patient. All the knowledge in the world is useless without the discipline to stay the course. Wealth is built by not making stupid moves, like quitting too early. Cultivate patience as your greatest financial asset. There will be good years and bad years, but time in the market matters most. Embrace the boredom and trust the math. Let your money work for you over a lifetime. The patient are always rewarded in the end. This is the glue that holds all the other secrets together. Patience is the ultimate compounding superpower. Play the long game, and you'll win." There you have it, the 7 secrets to multiplying your wealth with compound interest. Start early, reinvest everything, be consistent, seek higher returns, never withdraw early, increase contributions with every raise, and above all, be patient. These aren't just tips. They're the laws of wealth creation. Take one small step today. Open an account, automate a transfer, or bump up your contribution. Your future self will thank you. If you found value here, like, subscribe, and share this with someone who needs it. Thanks for watching. Your journey to wealth starts now.